I'm super excited for this week's episode of the Silicon Valley podcast. Before we begin, there's a couple people I really want to thank. Alma Nigas, who's a past guest on this show. And I also want to thank Thelma Ekier, who was a past guest that we did a second interview. That interview should be going live very shortly. Because of those individuals, they were at an event that allowed me to be introduced to Marsha. So without them, today's episode would not take place. So I want to give a thank you to them. And for our audience, please listen to those past episodes. There's a wealth of information there. Now, Marsha, I want to thank you for taking the time to be on this week's episode of the Silicon Valley podcast.
Thank you for having me, Sean.
Marsha, can you give us a little background of your career up until this point?
Sure. I was the vice president of investments with a company that's been absorbed by Morgan Stanley. And then I helped grow a company from being small to global and went public. And then I that introduced me to African opportunities. And there I realized how exciting the entrepreneurial spirit was in post-apartheid South Africa specifically. And so I just dug in and started learning. And it's been a fabulous learning curve ever since.
Okay, so you had this amazing learning curve. For our audience out there, I got a feeling this episode's also going to be a steep learning curve because I don't think many of them really know too much about Africa. So just to start, kind of what's the difference between the global perspective and Afro-optimism? Like, how does this distinction impact African funding, development? I know there's a lot in that question, but I think it would give our audience a good background for kind of the conversation ahead.
Yeah, it's all about mindset, right, Sean? I mean, if you've got a negative attitude, nothing works. If you look for bad stuff to validate why you don't want to do something, my granddaughter does this to me all the time. Now I'm watching her. So, but if you come at something with your eyes open and your heart open, and just see things for what they are, you'll be surprised how exciting life can be in general, and specifically what you find on the other side of what you thought you knew. So that's been the biggest adventure for me, I suppose, is learning how much wonderful, how much that is wonderful is going on in Africa. Being led by African entrepreneurs with a passion to solve problems for the people they love. And they're doing it with help or without. And it's not coming from charity. It's not coming from government aid. It's not coming from institutions who don't understand entrepreneurship. It's coming from personal relationships and shared values and goals. And that's what brings optimism. The youth of Africa that now number, like half of the population, they were not grown up pampered children. They grew up knowing that they needed to. The older ones had to provide school fees for the younger ones, and the village invested in the academically inclined kids so that they could go to special schools and even go off to other countries. And those kids are not staying in those other countries with fabulous jobs. They're first sending money back. That was almost $90 billion last year. And then they have started returning ever since the 2008 global meltdown. They've just started going back and saying, look, there's more opportunity here back home on the continent. So, all these boat people that you see escaping, that's not the whole story. Africa's a big continent. There are people leaving America too, So there's just so much to learn and so much opportunity in Africa. And there's so much that I feel like I have to write a book about it.
Well, if you do read that book, please let us know. We'll have you on the show for the book release. But you talked a lot about first money returning and then people returning. Can you talk a little bit about that? Because I would think if there were top engineers in the countries where they were getting educated, they would, get recruited by Google and that. When they go back to Africa, are they making copies of companies? Are they making original companies? Are they? I guess there's a lot there. So I'm kind of curious about that moving back. I'm also kind of curious if there's any issues that are really hindering the African funding, and how are those challenges being addressed?
Okay. So yes, they're the parents that spent a lot of money putting their kids through educations abroad, and they rejoiced and bragged to all their African friends when their kids got great jobs with Goldman Sachs or top engineering firms or Google. You're right. But then I mean, not all of them, but some of them started saying, "Well, Mom, I'm coming back." Well, why would you come home? You idiot, Instead, the young people just said, "Well, calm down, Mom. You know that problem you've got with banking. You know that problem you've got with the supply chain. You know how you don't have enough people staying home and growing ag products. We've figured out things here abroad. We've got networks. We've got access to funders, but they don't know what's going on back home. They don't understand how to build what needs to be built. So we're coming home to build it." So they've come home and built an ecosystem. And that ecosystem is supported by the ones who stay abroad and put money home, the ones who come back as professional doctors, lawyers, accountants, et cetera, and start running Accenture for global firms or whatever. And those people become angel investors. Now, angel investors are the first ones that back high impact potential ventures. And they are also donating their professional expertise and time, helping entrepreneurs on the ground in Africa build out not only their own businesses, but also the ecosystem that will support other entrepreneurs.
Are these angel investors? Because when you hear in Silicon Valley, you think of angel investors. You think of someone that want to invest in bleeding edge technology, deep tech that the market hasn't even heard of. Are the angel investors in Africa similar, or are they more, hey, this product's worked in France, let's bring it to Nigeria, or hey, this is just a basic simple, I don't want to call anything simple, but maybe opening up the capability for garbage collected in an area that doesn't have it. Like, are these angel investors? What do they want to invest in? Is it a little of everything, or is it kind of a proven thing overseas that they're taking there, or is it that Silicon Valley bleeding edge quantum compute and stuff that no one even knows if it works or not?
Okay, well, in Silicon Valley, the angel investors are investing in cutting edge stuff that, you think, well, Africa doesn't need cutting edge stuff. They need to be able to, get their oranges to the open market. All right. So, first of all, I was a member of a large angel investing group in Silicon Valley. And I remember the first day they opened their office in San Francisco. They had an entrepreneur come and tell about how, he had this special cat litter box to clean out the litter. And it was automated so that when the cat left, it detected the movement and then it scraped out. And you don't have to worry because it's not going to scrape your cat out because they've got it all built. So they put the technology to use that way because that's the problems. Those are the first world problems that the Silicon Valley entrepreneurs are focused on. And so the angels say, "Oh, yeah, let me invest in that." Well, okay, so that's not very exciting to me. When I'm going back and forth to Africa and looking at what they've got on the books, so they're doing things that nobody even knows there's a problem about, right? They told me, "Oh, we're, the my team that built out some of the first tech hubs that nurtured entrepreneurs in Lagos with their own money, and they used their own abilities to mentor these people. They backed somebody who was solving the very huge problem of fuel theft." And I said, "Fuel theft? What's that?" We go to the gas station and buy our gas, and we don't think anything of it. But what if the gas you paid for, you couldn't afford to have a full tank, but you told them you had $10, and they said, "Well, we can put in 5 liters of gas, of petrol, they call it there." But what if they only put in 4 or maybe even 3? You see, that's fuel theft. And it doesn't sound like a big issue, But when you don't have that much money and you do have to go far and your petrol is expensive, it matters. And so the CEO of that company, when I was asking, is this really a problem? He said, Google it. So we Googled it, and it's like billions of Google hits because of this issue. It's a big issue that American angels wouldn't know or care about, but African angels know and care about, and they nurtured that guy up, and he ended up in our first venture capital portfolio. So yeah, they do invest in that stuff, but on the other hand, they also invest in things like Haystack was innovating solutions. Like I said, that first world problems may not realize what the billions actually need, and but these young people from Lagos, two guys, they came up with solutions that would fit into the fintech category. And they got some local angels to invest. And then they got into Y Combinator in Silicon Valley, an accelerator group that then put them in front of all the right investors. And so they got what they needed to, go back and expand and build out all their wonderful innovations that they knew were working, that was needed. Meantime, one of those early investors, along with their local African angel professional investors, came in, some of the founders of Stripe. Well, Stripe got an inside look at what was going on inside Paystack, and they said, "Wow, these guys can really innovate, and those innovations matter. And these are killer apps. They're hacking fintech. We got to buy these guys." So, 4 years after these two young men, they look really young, and they got bought out for $200 million by Stripe. And then did they have to stop doing all they were doing? No, because that's why they were bought out. So what happened was these two young men who'd had to spend a lot of time before working on raising capital from early stage investors, trying to explain to them what they were working on, they don't have to do that anymore. Now they can spend 100% of their time growing their company and focusing on the innovations. That's what comes out of having African angels.
Okay, then with that, so African angels, how does the international market learn if they wanted to piggyback or co-invest, or how do international investors find out about these opportunities? And I'm also kind of curious, going back to that exit that company had when they were acquired. Is there a public market for IPOs, or do the founders just look to get acquired by private equity groups? Kind of, what does an exit look like for some of these?
No, exits have been a huge hindrance to African investors for a long time, but thanks to the Glass-Steagall Act, nobody really wants to go public anymore. Hardly. I had a son who brought a company public, and it was a unicorn, but he said, "Mom, I'm never going to do that again. I know the company's going to be private." And he's been able to build out his private company much faster than he was able to build out his public company in the US. And that's because of all of the onerous red tape that got added to the accounting side. So it's far more expensive. It takes longer. It's just, So truthfully, the entire industry globally, for angel investors, the spectrum goes like this: angel investors for the early stage startups, and then the venture capital comes in from the later startup stage through institutional rounds, and then the big bucks come in for private equity instead of IPOs on public exchanges. So the private equity really hasn't hindered the market once people got adjusted to that, but it's been a long time since Glass-Steagall. So this is now the current standard. So it's erased that problem for investing in Africa, because you still get private equity interest once your company is profitable enough to just be on the growth trajectory instead of on the development. Okay, what was the other part of that question?
How do international investors find out about this deal flow and what the problems are in Africa to invest in?
Right. Right. Well, that's why I launched a venture capital firm to help with that gap, because obviously I wasn't even invited into my team's African group. It's called the African Entrepreneurs Angel Group (AAG), and that was the foundation that came in after they started their Lagos tech hubs, and then they gathered these mentors, and then the mentors became angels. You see the evolution of the ecosystem. It's totally healthy. It's totally Afrocentric. It's totally African professional led. So again, that was the tech hubs, the angel, the mentors, the professional mentors who became investors at small scale. Then they pulled in, like say one of them worked for a bank or something, and then the bank becomes part of the next investor group. And then the venture capital, I led the venture capital arm because I was so impressed with what everybody was doing on the first several steps. But once we prove, but it's still early stage venture capital. You know, our first fund was only $1 million. Where in the U.S., you have to have $100 million size fund before anybody thinks you're even on the roadmap. And the SEC doesn't even monitor you until you're like 150 million. So, we had a lot of latitude, but we still went through all the third party administration and KYC and all that stuff. And then after the next part is that instead of just being startup investors, once our startup entrepreneurs get to profitability, then we hand them off to others who are more connected at that stage of their development. So once they get to institutional rounds, we go back and start over again with a new group. Oh, so how do Americans find out about this stuff? Well, first of all, if you're like me, you start getting to know people when you're in college, and there's somebody down the row from you, and they're from Africa, and you get to know them, and then if you're like going to Stanford, where I spoke at the Stanford's first Africa Business Conference, and one of the young men who put that together, when he went back to Kenya, he became the country's the managing director of the country's leading investment banking group. I know you're part of an investment banking group, right? And the lawyer too, right? Aren't you a lawyer too?
Not a lawyer. I still have a little bit of my soul.
Oh, no. You're doing a great job. So investment banking, is a huge part of Africa's development. I forgot where I was going with this one.
Understanding access to deal flow, getting
Oh yeah.
opportunities
Okay.
there.
All right. So it's getting to okay. So the first thing you can do is get to know people that are right here in your classroom when you're going through college, and then a lot of the companies, Silicon Valley, they hire people from everywhere. Right. My brother was HR director at a Japanese company in tech, and he was over people from 47 different countries. So there's a lot of opportunities that you have to do that sort of thing. And people like me have taken advantage of that and gotten to know personal friends and whatever. But I was specifically seeking a team that would help me be able to build venture capital out for Africa. And because it's so hard, like you said, it's so hard. How can you really develop the portfolio of at least 20 ventures that you have to have minimum in order to really be able to balance a portfolio effectively and put into play the power law curve, so that you can manage all of the ventures that don't work. I mean, even the best entrepreneurs, their first ventures don't usually work. But you have to have a portfolio. So I highly recommend that you invest in a fund like ours. I mean, I don't mean it, because we need to be promotional, but the point is that that's the way you learn. You look over the shoulder of somebody who's doing it and who will take your small investment and let you learn. Join an angel group that is internationally conscious and aware, and we'll be building those out. So look for it, help us do it. And then the next step, of course, is investing in a small venture capital fund. We started taking people with I don't know, what was our minimum? Maybe 50,000. The angel groups will take 5,000. They just bundle it together. Ours will take similarly small comparatively to venture capital. Bigger the venture capital fund, the higher the ticket you have to have. But what you can do then is look at the portfolio that the experts are putting together for you. Or, you may think they're an expert and then you find out later they're not so much. But you look over the shoulder and see what they've done right, what they've done wrong, and what you'd like to do differently. But you're always back to this mindset thing. You're always looking for people who are aligned with your goals, and your vision, and you're open to learn how to get there. But you do want to know where you want to go, and so it is a journey. But you can cut the journey short by co-investing with people who've been doing it for a long time.
So going back, there was something that was mentioned earlier about the ecosystem there. I'm wondering about the key factors that are driving the progression through ecosystem construction in Africa. Can you talk a little bit about that?
Yeah, so that's why I honor and respect my team so much, because that was their reason for going back, was to set up this entrepreneur ecosystem. When Michael and his best buddy were in middle school, 12 and 14 years of age, they promised each other they would build a support system for innovation, tech-based innovation. And they have over the years just gathered people around them, friends, shared goal, acquaintances, to build that out. And like I said, it started with, well, no, I didn't tell you. The first step was to educate themselves. And then they came back with the expertise that they gained from working at great corporations, and the networks that they built globally to launch the tech hubs that support the entrepreneurs and the innovators. And then they built out the angel network. So the people do you want me to actually mention the names, or?
You can avoid names. I mean, yeah, but go on details.
Yeah,
Stories.
yeah. Well, okay. So somebody whose mother was in a terrible traffic accident, and so he grew up wanting to be a doctor because she wanted him to be. Then he got to that point, and then she was happy. But then what he really wanted to do was help with these tech hubs. So anyway, and then another guy who went off and became an engineer, and he's now he went back to help open these tech hubs. And Idris Bello, who I've spoken with you about, who he was raised by a professor in a university in Nigeria, and their motto was never be without a book. The dad said never be caught in a waiting line or whatever without your book. So anyway, so he grew up. He now has, I've forgotten how many master's degrees, I suppose, but one from Oxford in public health, one from Rice in business management, and one from Houston in computer sciences. I think that's the way it goes. He wanted me to write him a recommendation for PhD, but I said you don't need a PhD to be a venture capitalist. They only care about how much assets you have under management. So I kind of diverted him back to working with me, and that's worked real well. He's one of Africa's top investors. But it's people like that. It's people who, they went abroad or went, London or wherever, and went to top schools, and did their best. They got all straight A's or whatever. And then they started working at a top accountancy or law firm or engineering firm, and they gained acumen there, and they used the money to help build out the ecosystem, or they came back on every year, several times a year, to help, and they might even leave their consultancy, as my partners did, and form their own professional consultancy that would stabilize their personal income so that they could afford what they do is take jobs that help with, for example, digital transparency. So then you don't have the problem of a con man getting into control in a government department in Nigeria's roads or Kenya's railroads or whatever, and they have to be accountable because the financing, the costs, the money flow is all being tracked because it's digitally programmed appropriately, and that's the kind of thing that these consultancies do. So that's reducing the risk for everyone and reducing the costs for as well. So these are the people. These are the heroes. These are the champions. They and their families who go through all of this with them because they're not looking out for themselves personally. They're doing enough to keep themselves, stable and help their families. But their primary motive is to help the country. So one of those now, he's over Nigeria's conversion to compressed natural gas to reduce the smog issues across the country, to reduce the dependence on, how Nigeria is so criticized for exporting its raw crude and then having to pay more to get it back refined. Well, they have one of their billionaires who just started off as an entrepreneurial kid who was selling sugar on the street or whatever. Then he became in cement. He got that. Anyway, he built out the liquefied petroleum, the LPG plant that then throws off the fertilizer. And so one of my colleagues is distributing the fertilizer to the ag entrepreneurs, and now he's been appointed by the president to help with the CNG program, which will help counterbalance this thing that the New York Times acted this week like they hated, which is the removal of the subsidies for that, so that their citizens could buy the refined petroleum that comes back from abroad. That was they've been spending $1 billion a month helping their citizens do that. Now it's down to $500 million a month. So they do care about the poor people who can't afford this, but it's the transition that the New York Times itself a year ago or 2 years ago was saying you have to do this. All the economists in the world tell you, Nigeria, that you have to stop these subsidies. So they did, and they got a president who was willing to take the political heat from all the people who didn't want him to do it because they were making money on the side, stealing the low-cost fuel and selling it to people across the border and making their money that way. So it was robbing the people of Nigeria. Anyway, the point is that it was the right thing to do. It was a hard political decision. He did it. And now he's building out the solutions with the compressed natural gas. Anyway, so there's so much more going on than the criticisms that, New York Times will say that, you're not doing what you have to do. And then once they do what they have to do, they get somebody in who's brave enough to do that. Then they criticize him because some of the poor people can't afford it. Well, I'm sorry. It was wrong for the people, the administrations previously to not let the Naira float. They were falsifying the value and holding it pegged at that false value and so most of the money was having to be transacted in the gray zone of the forex. Anyway, so it's getting straightened out. Stop picking on them while they're doing the right thing. There's so many lessons that Americans need to learn, right, Sean?
I got a feeling our audience is going to have to listen to that like 4 times to understand.
Sorry, I get on a roll, but it's taken 25 years for me to figure some of this stuff out. But the bottom line is just be curious. Be curious enough to ask more questions and don't just believe all of this fake, fraudulent criticism. It's so superficial to just say, oh, Africans can't do it for themselves. Look at all this problem. But you know what? If you dig, the deeper you dig, the more you find out that the root problem was not their fault. Somebody came in and with their kind, bleeding heart, dumped a bunch of free bed nets on the population. And then 6 months later, when the or however long, when the donors got bored with that little episode, then the people who had been making a living making these things were bankrupt, and they'd had to let all their employees go, and they'd lost the ability to have the power to make them. And anyway, you see my point. They've been Africans being the darling of donors is not a good thing for a country or a continent or entrepreneurs. And being donated to by institutions is a killer for entrepreneurs.
Huh.
You undermine the entrepreneurial ecosystem when you just dump your excess dairy products on a continent that has real costs. But your politicians have given these subsidies to the dairy farmers of the Midwest so that they can make it below market, and then the government buys that for school lunch programs, and then they have too much of it, so then they dump it on. They say, "Oh well, we'll give away the last of it just before it goes bad to Africa," and then they undermine the dairy farmers of Africa. I mean, we really need to do this stuff smarter, and I do not know why it's not more publicized. I do know why. The reason why is because people's jobs depend on keeping this donor base going instead of going and getting a real job, an entrepreneurial job, and fixing things the right way, or investing, better yet, invest in the entrepreneurs of Africa who know what needs to be done and are doing it, but you're undermining it.
So talking about on that, how would one invest in the entrepreneurs in Africa versus, I mean, I would think there'd be a lot of charities out there that are thinking they are investing in the entrepreneur in Africa, where it kind of sounds like they're actually not. They're hindering the African entrepreneur. Can you talk a little about that?
Their definition of investing is very suspect, because so let's just talk in terms of government things where they say, oh, we're empowering this and enabling that and facilitating this other thing. And you think they're actually doing what needs to be done, but you start getting to know them and saying, okay, well, I have this thing that I'd like you to invest in because it's exactly what you want done. And they say, oh, no. We don't put money into that any project. We put money into capacity building, which is educating, which is paying our consultants to tell us how to do the educating, which is putting money into offices and transportation and daily salaries for our citizens that live abroad. There's this whole huge. You know what I challenge? I challenge DFIs to do, and because it's not being done. I even asked Perplexity AI that it's not available, and that's let people know what your billions of dollars budget is, number one. And then how much of that actually gets invested in the project and the people you're trying to help, as opposed to everybody in between. Do you remember, maybe you're too young for this, but we went through this with nonprofits a long time ago, where we said, okay, we will only donate to you if your overhead is the lowest in this category. We started out with really well-known and previously respected organizations with overhead of like 90%. Yeah, less than 10% was going into what they said they were putting the money into. Believe me or not, that was actually a good deal back then. And so then people kept holding them accountable until they started chopping at that. But then now you should see the convoluted financing accounting methods that charity uses. I should touch on that in the book too, huh? So that they end up saying that this money went into that project, but they don't tell you that none of it got spent on actually helping the local entrepreneurs and solving the problem for the people.
Marsha, I think this has given our audience a lot to think about. What's a key takeaway that you think people should walk away from this conversation thinking about?
Being gullible, I suppose. I've been accused of being gullible for trusting in African entrepreneurs. Even my kids thought they were worried that I was going to, go bankrupt and stuff doing this. But when you also need to realize that the biggest scams are actually being carried out by the most respected institutions on earth right now because of the personal incentive of protecting their own job as opposed to fulfilling the mandate that their institution was established to solve. So I think that's the takeaway: is be careful who's really gullible here. I've been able to invest small amounts and profit in big ways, and I'm going to put that all out there so that people know, can see it. But it's so who's really gullible here? If you lead with your heart and you end up with entrepreneurs who do everything they can to solve that problem and they never, never, never give up, you weren't gullible, were you? But if you trust development institutions that are using the wrong kind of financing vehicle for entrepreneurs, who's gullible now? I think we all need to be asking questions when we see things like that New York Times article. There's just not a lot of honesty out there right now. And it's not the Africans that are lying, not my African associates. So, there is a lot to think about.
Marsha, if anyone wants to find out more about what you're working on, get on a list for maybe a future book. Hopefully you do end up writing one. How would they go about finding out more information about what you're working on?
Well, a website. I don't have one set up for the book yet, but LoftyInc.vc, Lofty Ideals That Become Companies. Lofty Inc. was our group's name, and .vc for venture capital. If you just type that on Google, you'll get to our venture capital side, and that's only part of the bigger group. But yeah, that will help keep you in touch. And my LinkedIn site, Marsha Wulff, WULFF. So follow me, and we'll keep you up on everything. It's a very exciting journey, and I'd love sharing it.
Fantastic. We'll have all that information in the show notes. And for our audience out there, I'm not the host of the Silicon Valley Podcast. I'm an investment banker focused on mergers, acquisitions, growth capital. Connect with me on my LinkedIn, Sean Flynn, or go to thesiliconvalleypodcast.com, where you can see the list of our archives mentioned earlier. Almaz and Thelma, their past episodes are on our website, along with checking us out on any major podcast platform, YouTube, and that we're also there. And with that, Marsha, I want to thank you for your time on this week's episode of the Silicon Valley Podcast.
Thank you for what you do, Sean.